The impact of the Bitcoin halving is not over. What's next? For coin metrics, the 2024 halving was the most important in Bitcoin history. A month after the fourth halving in the history of Bitcoin took place, the analysis firm, Coin Metrics, highlights its relevance for the future of the market. In a report, he specifies about this event that the long-term impacts have not yet materialized. Although there is no guarantee of future performance, Bitcoin's most significant periods of appreciation often occur many months after the halving, he adds. The following graph, provided by TradingView, shows how Bitcoin appreciation has historically occurred about 6 months after each halving. For now, as an optimistic sign, he sees that the demand side is back in the driver's seat. This is, he clarifies, while the influence of the halving in the narrative of cryptocurrencies is receding, with respect to the selling pressure of the miners. One of the main concerns leading up to each halving is the selling pressure that miners could introduce to the market, he comments. This is because the halving reduces by half the amount of Bitcoin obtained as a reward for mining, which directly impacts the income of these actors. However, he highlights that selling pressure from miners is now moderate, with issuance well below the threshold needed to significantly move the price of Bitcoin. In this sense, he perceives that the market can comfortably absorb the additional offer of these actors without negatively impacting the market. This report is presented while Bitcoin remains trading around $65,000, showing recovery from a relapse to $56,000. The Bitcoin halving in 2024 was the most important in its history. For Coin Metrics, the Bitcoin halving in 2024 was the most important in its history, as it launched a new token protocol and tested the balance sheets in a multi-billion-dollar industry. The analysis firm emphasizes that, compared to previous halvings, mining has reached an unprecedented scale, with multi-million-dollar investments in hardware and infrastructure that improve its cost-income ratio. Furthermore, he adds that the launches on the Bitcoin network of the Ordinals protocols last year and runes with the recent halving, which allow new tokens, reinforced the income of miners. He details that, with the latter, an increase in traffic on the network was triggered, which increased the transaction fees they charge to record prices. New protocols like runes offer insight into catalysts for increased revenue, but these markets remain immature, leaving significant gaps in mining profitability assumptions, he says. Therefore, the firm sees the development of these types of advances in the industry as crucial, impacting the supply of miners in the market. On the demand side, although Coin Metrics does not mention it, there is a growing wave of institutional and corporate investment in Bitcoin, through the ETFs that were approved in January in the United States. It has previously been reported that important financial entities, not only in the United States but also in Canada, are investing hundreds of millions of dollars in these ETFs. It can be expected that if this trend continues, it will represent a major bullish driver for Bitcoin.